Welcome to Mark Arnold's Finance. I have a big video for you guys. 7 of my companies in my portfolio reported earnings this last week. So we're going to cover all 7 of these companies and my portfolio performance. And if you're new to my channel, I share my portfolio performance with every single video. So if you like that type of transparency, if you like this video, be sure to subscribe. I'd really appreciate it. And thank you to everybody who is subscribed, watching, and following along. So let's get started with my portfolio performance. We will see here that as this thumbnail that I have for this video, Amazon has gone up massively. In fact, my whole portfolio now, it was struggling above 1%. It was even in the red for quite a while. Now it's at 4.5% in the green. That's $1,800 of profit so far. And Amazon, it was in the red for quite a while for me, and then I think the highest it went was 7% in the green, but now it is 18.65% in the green. In fact, it jumped to over 20% throughout the day today through yesterday. So this is great, and a lot of these companies have turned from red to green, and that's what I like to see. That's why I invest. That's why I do my research and invest in quality companies and what I feel are companies that I want to put my money into and take those chances on. Of course, I have a few losers, as you can see, so be sure to take a look at this. Let me know if you have any questions. I'd be happy to answer any of those in the comments. So let's get started. Let's start with some news real quick. I would like to share that the Fed did raise rates by 75 basis points. Now, this did not really have any negative effect on the stock market because this was expected, and when things are expected and happen that way, it really doesn't throw the market in a green or red kind of stance. But what did kind of throw the market into green, besides some positive earnings, I feel, is that we did have 2 consecutive negative declines of GDP. This quarter was a negative 0.9%. Last quarter was a negative 1.6%, but I will say a recession has not been called yet. And that's because they still have a lot of other evidence and things to look at, such as consumer spending, business investment, and the robust job growth. I will say travel has been up massively, so people are spending. So there's a lot of things they have to consider. So we'll see if they do call a recession, but as of now, we're not in one. So I think the economy really liked that and reacted positively. So it is raining right now, pretty crazy at my house. So if you hear some weird noises, it's just rain hitting the window. It's a pretty bad thunderstorm, actually. Almost might be some hail out there. So I apologize if there's any kind of interference with noise in the background. Hopefully it's pretty quiet for you, but you might hear some thunder here and there. It's just going to add to the effects of this video. So let's start with Microsoft. Now, Microsoft, they had an earnings per share of $2.23 versus the estimated $2.29. So this was the first miss of their earnings per share since 2016. So that was interesting to know. Revenue came in at $51.87 billion versus the $52.44 billion, so a slight miss again. Azure grew 40%. This is their cloud-based software, very important for this company as it is for Google and Amazon. So it grew 40%, a very healthy number, but last quarter it did grow 46%. So we kind of see that growth kind of declining, and the expectation was a 43% growth. So at 40%, a little below estimates. Its intelligent cloud segment, which includes Azure, came in at revenue of $20.91 billion versus the estimated $21.1 billion. So again, it came below estimates. PC sales are slowing, Microsoft said, and there's a slower cloud infrastructure growth, as we saw with the numbers. And they say it's due to the bad foreign exchange rates, a lot of these misses. But the positive thing for Microsoft was that its forecast was bright. It says it's forecasting double-digit revenue and operating income growth. And that's what investors are looking at. Forget the slight misses, they're looking at the future, and Microsoft is saying it's going to be very positive. So what I want to do is take a look at their stock chart versus the performance of my portfolio. So in my portfolio, Microsoft is up 19.74%. 5%, so just short of 20%. Now their stock chart, I'm gonna do the last 5 days for all these charts. We will see here that Microsoft over the last 5 days is up 7.5%. So the market is showing you they reacted positively. So this affected my portfolio positively and helped put me further into the green. So Microsoft for me, a high quality company, subscription-based services, has Azure, which is gonna be a giant moneymaker for it. So very positive overall, even though they missed a lot of their earnings. They were slight misses, and it's the forecast that investors look at, and that's why I'm happy with Microsoft. So I give Microsoft a thumbs up. If we look at 3M, now this company, I think I was expecting a slight miss, but it actually beat estimates. So earnings per share came in at $2.48 versus the $2.42 estimated, and revenue came in at $8.7 billion versus the expected $8.58 billion. So it beat on both earnings per share and revenue. Net income did fall to $78 million from the $1.5 billion a year earlier, but that includes a $1.2 billion pre-tax charge tied to resolving litigation related to their combat arms earplugs. And 3M seems to be always drowning in litigation. That's one of the negatives that investors bring up. So the fact that it's trying to resolve this, to me, is a good sign. It did hit its net income, but that's okay. Now, the big news, and this helped 3M really, they beat their earnings, but what investors really liked is they're spinning off their healthcare business into a new public company, and they will maintain a 19.9% stake in that new company. And the lawsuits of all its healthcare related stuff will go with that company. So I think people see that as a positive. Now, the new business will focus on wound and oral care, healthcare, IT, and biopharma filtration, the material science company said in this release. So a positive for investors. They're seeing this as a way that they're trying to fix their litigation issues and spinning off parts of their business that are tied to those. And investors seem to like that. Now, with their forecast, we will see here that this is what 3M said. They did lower its full year outlook for several metrics, including earnings per share and organic sales growth, due to currency fluctuations and the current uncertain macroeconomic environment. The company said it also was setting aside $1 billion to fund a trust related to litigation surrounding its earplugs used by military service members. Management feels that will help to expedite the resolution of claims and give investors a quantifiable guideline to their expected costs to the company. So I just see this as they're really putting the efforts in to help resolve these expensive litigation issues. And so how did investors react? Well, if we look at my portfolio, 3M was down 12%, and now it's only down 6.21%. And if we look at 3M's stock chart, we will see investors liked all this news. It's up 6.9% over the last 5 days, and you'll see the big jump with its earnings release. So overall, I'm satisfied with 3M's earnings. They beat their EPS, their revenue. They're trying to handle litigation issues. Even though their forecast isn't bright, I think people just really liked what they saw. And so 3M for me was an okay earnings. Now let's move to good old Coca-Cola. So Coca-Cola's earnings per share came in at 0.7 cents versus the expected 0.67, so that was a beat. The revenue came in at 11.3 billion versus the expected 10.56 billion, so that was a beat. And they said it was due to price increases that the company did and a boosting global sales of their products. So I see this as people are getting out more, right? Travel is up, going to the movie theater has jumped up massively. So all these things have contributed to it. Now, if we look here, the company raised prices to manage the higher costs on freight, high fructose corn syrup, and aluminum. In a conference call with analysts Tuesday, CEO James Quincy said the company is watching changes in consumer behavior and preparing for a more challenging economic environment. So they're expecting things to become more challenging. But he said the company isn't seeing a significant pullback in spending, and the consumers in these recessionary environmental times typically stop buying bigger ticket items before trying to save on lower ticket purchases. So basically, yeah, people are going to cut on their big ticket items, and Coca-Cola will be the last to see any type of recession impacts. So that is good. Now, they did increase their forecast growth, which is awesome, to 12 to 13% for their revenue compared to what they had as a growth of 7 to 8%. So they said no longer are we expecting the 7 to 8% revenue growth. We're now expecting 12 to 13% for the forecast, which is fantastic. So I love that. Coca-Cola, to me, a lot of people think it's just too big to keep growing. But no, that is something a lot of people get wrong with these big companies. They have the capital to innovate, to create, to purchase and buy out other companies. And you cannot put that in your mindset that big companies can't grow. So Coca-Cola is doing well in my portfolio. It is up 28.86%. That is awesome. And if we look at their stock chart, over the last 5 days, investors liked their earnings, and it's up 4.26%. So Coca-Cola for me was good earnings. I really did like that. So let's move to Amazon. Of course, Amazon is what I'm saying is saving my portfolio right now. And it is up in my portfolio, we'll just start with this, 18.65%. And I'll visit that at the end in a minute, but let's go over their earnings. So EPS came in at 18 cents versus the estimated 13 cents. So that was a beat. Revenue came in at 121.23 billion, a big number, versus the estimated 119.09. So they beat there pretty good. Amazon Web Services. This is where I'm very bullish on this company. They came in at $19.7 billion versus the expected $19.56 billion. So they beat their advertising. Now keep in mind, Meta, Snap, Twitter, other companies like Google, they're suffering with their advertising dollars. And so Amazon surprisingly came in at $8.76 billion in advertising versus the expected $8.65 billion. So that was a beat, and that's very impressive. But I think they have a strong advertising business because on their platform, you literally can click on an advertisement and hit buy and put it in your cart. So it's very effective. And I think advertisers are willing to go to a company like Amazon over any other company. So their forecast for their third quarter revenue is between 125 billion and 130 billion, which is a 13 to 17% growth. So that is very awesome to hear. So future growth is expected. They did cut 99,000 employees, and they now have 1.52 million employees. That's bigger than most US cities. That is crazy that they have that many employees. But I do like to see as an investor that they're keeping in mind their expenses related to wages. They did record a 3.9 billion loss on Rivian in this quarter, and as of this year, year to date so far, they have recorded an 11.5 billion loss in Rivian. So this company, they are starting to deploy their electric, vehicles for Amazon to deliver. So I think this company will eventually be a positive, but for right now, it's just dragging them down. So as I mentioned, in my portfolio, Amazon is up 18.65%. Now the stock has gone up, and investors loved their earnings. It is up almost 10% at 9.95. That is awesome for a 1 week growth of almost 10%. That is massive, and that's what's helping boost my portfolio up into this, level of green it hasn't seen pretty much all year. So that is fantastic. Amazon is a huge positive earnings report for me. I'm very bullish on this company. I think it has huge future growth. And let me say this, analysts had this stock rated at a very bearish rating. Now all of a sudden they're changing their tune and they're making it more and more of a bullish analyst review. So what I'm going to say is do not go off of analysts. They change so often and they go off of what they have in front of them. They don't do the deep dive reviews that I feel you and I do. And that just goes to show you, if you go off what an analyst says, you're going to get it wrong. Meta had a high bullish rating, and we'll see here in a minute what happened. So do not go off of analyst rating. They're okay to keep in mind. I think it's good to hear what they have to say, but always do your own research. All right, enough of Amazon. Let's move to VICI, my experiential REIT that I just love. This company reported EPS of 0.48 versus the expected 0.47, so a slight beat. The revenue came in at $662.6 million in second quarter versus $376.4 million in quarter one. So they increased their second quarter revenue by $286.2 million. That is fantastic. I love to see that revenue growth. They did receive investment grade rating from S&P and Fitch in April. That allows them to have so much more freedom now. That is just amazing. And I did suspect that. I did a video probably last year at some point saying they will be investment grade at some point, and that's just gonna attract a lot more investors, and it has. They closed their strategic acquisition of MGM Growth Properties. That was a huge one. That's expanding their dominance on the Vegas Strip, and I just think that's going to provide them much needed growth and profit in the future. And they made history. I researched this, found it, and this is cool. They made history to become the fastest REIT to transition from an IPO to the S&P 500 listing ever. That is fantastic. So VICI, great earnings in my portfolio. They are up 18.26%. Which is fantastic. And if we look at their stock chart, investors love the earnings. It's up 3.23%, and that's just great. I give them a great earnings score. I'm so bullish on this company long term, and I'm very happy, and I hope to add more. Maybe there will be a dip someday, but with travel up high, this was good to see, because if they had negative earnings with this pent-up demand travel, I would have been a little worried. Next up is AbbVie. Now, AbbVie's earnings per share came in at 3.37 versus the expected 3.33, so they beat there. Their sales are up 4.5% year over year, which is great, to a tune of 14.58 billion versus the 14.62 billion estimated. So they did miss slightly on their sales. The gross and operating margins did improve. There was no forecast adjustment, so that can be good and bad, because people like to see, like, hey, are you going to improve next time? Are you going to decrease? But they just said, we really have no adjustments at this point. Now, their mega blockbuster drug Humira, the sales came in at 5.4 billion versus the estimated 5.2 billion. So that was a beat. But next year, they're going to start allowing biosimilars to start selling, and it's expected to cut the revenue of AbbVie's Humira portion in almost half, or more than half, I believe. So that's something to grapple with as an investor. AbbVie's Allergan division reached an opioid settlement at $2+ billion, and the 2Q litigation spending came in at 2.2 billion, of which a large amount was related to that Allergan settlement. So AbbVie has some litigation issues of its own, but it seems to be handling that and settling it, which is great. I am a little worried about Humira, but they have some other very strong drugs in the pipeline that I think will still keep this a very strong stock. So I don't plan on selling out. I do plan on holding, but I'm not going to add. But I think these are overall okay earnings. And you know, the market though, I think they kind of agreed with me. There's some worries here, but nothing like tremendously red flaggish or anything like that. So with AbbVie in my portfolio, I did invest in this company pretty early on before it went way up. So it's up for me 58.31%. So that is nice to have that in my portfolio. Now with its stock over the last 5 days, we will see that it is down 3.39%. So not a huge negative reaction, but like I said, there are some things that, yeah, with the litigation and the Humira thing, it's kind of like, and of course, with no adjustment in its forecast, again, you can read that as good or bad. So overall, an okay earnings for AbbVie. Now, I saved the worst for last, and that's going to be Meta. There's a lot I have to say here. So their earnings per share came in at $2.46 versus the estimated $2.59, so that was a miss. Their revenue came in at 28.82 billion versus the 28.94 billion estimate, so that was a slight miss. And their revenue fell almost 1% from a year earlier, so their revenue has reduced, which, you know, you like to see that revenue increase year over year, so that is something that is, I think, hard for investors to see. Their daily active users did increase, though, to 1.97 billion versus the 1.96 billion estimate. So a slight beat there, but that is good. That means they're keeping the attention of their users and they're increasing it. So that is a positive for me. Their monthly active users, so the daily beat, the monthly active slightly missed at 2.93 billion versus the 2.94 billion. So not a huge negative for me. Their average revenue per user came in at $9.82 versus the expected $9.83. So a slight miss there. Now, we can get into some other things here. So their forecast is what I think really sent this stock into the negative. For the third quarter, they're expecting a revenue between 26 billion to 28.5 billion versus what they had estimated at a 30.5 billion. So that's a reduction of 2 to 11% from a year ago if that's where they come in. Now, TikTok is a big pain in the you-know-what for Meta, and it's taking a lot of market share. It's creating a lot of competition for all the social media apps out there. And Facebook has their answer, they're trying to answer, shall we say, with Reels, which did reach 1 billion in revenue, so that is good. But Mark Zuckerberg did say that Instagram and the news feed is a better revenue income for them because it's more efficient. And Reels to them is taken away from that. So even though Reels is growing in its revenue, in its profits, it's kind of taken away from the Instagram and news feed that creates a more efficient revenue stream. So that's kind of in the short term, he says, that's not, you know, what we would like to see, but in the long term, they're hoping to really make a lot of changes with Reels where it's better for them. So I will say that, you know, that was a good thing for me. It wasn't horrible. Reels is you know, improving, it's growing, and hopefully it catches on to where this company can really make some money off of it. But their forecast, like I said, their revenue decline is not good. That's not what we like to see. Their employees, they increased their employee count by 32% from a year earlier, and they now have 83,553 employees. So that's interesting that they're kind of having these hard times and they're increasing their employee count. And I know another channel, Joseph Carlson, he recently sold out of Meta and he did not like that. But I will say that could be them just positioning themselves for something bigger that, you know, they might see internally that we don't. So I don't see it as a negative or really positive. I'm kind of neutral on it. I want to see what happens. But they did say they plan on slowing the pace of their hiring. Now, on the positive side of their forecast, their expenses are going to be between 85 to 88 billion for 2022 versus what they originally expected to be between 87 and 97 billion. So that's great to see their expenses go down. Their sales and marketing spend did go up 10% year over year, but I think that's necessary, right? They got to stay competitive and put money into those types of stuff. Now, they did do repurchases of 5.8 billion in shares, so that is a great sign. They're buying back their shares. That is creating some positiveness for investors. Now, the metaverse. Their Reality Labs brought in $452 million in sales, so that's good, but it still recorded a 2.8 billion loss in the second quarter, and they are expecting less revenue in third quarter. So I don't like that. Out of all this, you know, I'm really bullish on the metaverse to see that next quarter they're going to create even less revenue than second quarter. I don't like that, but I'm still willing to hang out and see what happens. I just am curious why that happened and why they're expecting that decrease. They are still the leader in VR, and they're upping the price of their Oculus, their next version, by $100. So we'll see what all that does for them. So here's what I'll say with Meta. First, let's look at what it's done in my portfolio. It's down almost 30%. It's at a negative 29.72%. This is a big drag on my portfolio. Thankfully, Amazon is saving it at this point, like I stated. If we look at their stock chart, this is how the investors reacted. Wasn't as bad as I thought, but in the last 5 days, it's down 5.86%. So I think people like myself are weighing that this is a company that still is, pretty darn inexpensive for its cash generation and a few other things. I will say I'm bullish on the metaverse. I do see a future there. How big of a positive that'll be for Meta, of course, none of us will know until the next probably 5 to 10 years out. So I am still an investor in Meta. I'm not going to sell. I'm not going to buy anymore. I'm going to hold what I have. And I think over the next few years will determine if I keep holding or if I do sell out. But I'm still bullish. I still think you can't just go off of one quarter's negative earnings or maybe 2 quarters, 3 quarters in a row. With a company like this that is transitioning itself into something different because it notices that, hey, our social media portion is so large, it has almost half the world's population using it. That's going to be a hard thing to grow. That's why they pivoted to the metaverse. I like that move by this company. They're trying to reinvent themselves, create some new streams of revenue and growth, and take chances. And that's what companies have to do. That's what Meta's doing. You can definitely argue with me if you're not bullish on the metaverse. I will be okay with that. This is my own thesis as an investor with Meta on what I believe this company is going to do in the future. And I do think this will still be a great investment. One day, I do think I will make some good positive money. Now look, advertisements are down. Of course, Amazon, I explained why I believe their advertisement is up, but most other companies are suffering with lower advertisement dollars. That will turn around at some point, and a huge company like Meta is going to make a lot of money there. Their metaverse is only going to grow. I believe that it's already popular. They already sold a ton of Oculuses. The numbers really aren't out there, but I've seen them everywhere. And I think they're just going to keep improving in that process and utilizing it for so much more than just entertainment purposes. So you let me know what your thoughts are on Meta. I'm still bullish. I'm not buying or selling. I'm just holding at this point. So yes, their earnings were disappointing, but I did expect that. I did say that in a prior video. I don't expect Meta to really become a strong earnings company for investors for probably another 1 to 2 years where we'll start seeing it turn around. So for now, I'm still happy with Meta. It is a drag on my portfolio. I did buy in at the wrong time, but with all that said, I think this will still make me money in the long term. So with that said, all those 7 companies, we had 5 that were okay to very positive, and 2 that were kind of a drag on my portfolio. AbbVie kind of came down some, and Meta definitely has been a drag on my portfolio for a while. So all these companies I am holding. I would love to add to them, so we'll just have to see over the next couple weeks and months what their price and valuations are at. I will be following these closely as I always have. I wish I could have added more into Amazon, but I added a decent amount where I'm satisfied. I think it'll just be taking off from here. So if you've been investing in it when it was below, the 115 range, I think you're going to do great with Amazon. So let me know what you thought of these companies that I have in my portfolio, the earnings that occurred. If you think any of these are great for my portfolio or bad and I should sell out, I'd love to hear your opinions. And thank you so much for joining me. This was a big video and I had a lot to go over, but I thought this was really fun and something that hopefully will help you guys in determining some stuff as well with your portfolio. So let me know what you think, give me some feedback, and hope you guys have a great day. We'll see you next time on Mark Arnold's Finance.